There is Bitcoin, but there are thousands of other cryptocurrency out there. So Bitcoin obviously has proven, especially in this cycle, to be a more stable crypto asset. Now is well recognized by Wall Street as a store of value. What makes it unique compared to other digital assets?
I don't think the energy consumed makes Bitcoin valuable. In fact, I think it's the other way around, that because Bitcoin is valuable, people are willing to expend a great deal of energy to mine the Bitcoin. An individual might hold Bitcoin for self-sovereignty, for self-custody, to be able to make transfers without somebody else's permission, and to be able to store value in ways that a central bank can't mess with by diluting the supply of money. Now, for a corporation, some of those just won't apply. Think about the case of self-sovereignty. Well, a corporation isn't a self. It's an entity comprised of multiple selves: the shareholders, the board, the employees, and so on. So that doesn't make sense.
Hi, this is Steffi and welcome to the Financial Fox, where we dive deep into the biggest financial and technological shifts shaping our world. We live in a time of geopolitical tension, where there is a broken financial system, a rampant inflation and extreme market volatility. Today, I have prepared an episode that focuses on Bitcoin and build a case for Bitcoin for investors, for corporations and for nation states. The gap between the rich and the poor is widening. Then on the other side, you have got the government that is struggling with different challenges, but at the same time is increasing surveillance and is using technology to control us. And censorship is becoming a reality for many. But in the middle of all this madness, Bitcoin has emerged as a beacon of hope, a way for individuals to take full control of their money and assets. Now, everyone talk about Bitcoin price, where we are going, but honestly, what is really important is that we need to go beyond that. What does Bitcoin really represent? Why should investors, corporations, and even countries take it seriously? Well, to help explore all of this, I will be joined by Andrew Bailey, a fellow at the Bitcoin Policy Institute and co-author of Resistance Money, a philosophical case for Bitcoin. Before we dive into today's interview, I'd like to introduce you to our partner, HIVE Digital Technologies, a publicly listed company building the next generation data center infrastructure with 100% renewable energy. HIVE was the first crypto miner to go public and the first one to have an AI strategy. With over 2,600 Bitcoin on their balance sheet and operations in Canada, Sweden, Iceland, and Paraguay, HIVE is fully committed to transforming communities, rebalancing the energy grid, and delivering value to shareholders with a low dilution and cash-focused approach. If you don't know HIVE, check them out at HIVEdigitaltechnologies.com. If you are watching our content, whether it is on YouTube or on our social media, please take a moment to subscribe and follow. Your support is crucial to grow the channel so we can educate more people about crypto. And please remember that the content on the show is for informational purposes only and not intended as financial advice. Any opinion expressed by me or my guests are ours alone, and you should not act solely on the back of them. As always, do your own research, level up your skills, and be accountable for your own decisions. And the last things I want to mention is that I have got something for you. We have a discount code for your ticket if you want to attend the biggest Bitcoin conference in Las Vegas this year in May. You have 10% using the code FOX, and you can find all the links in the description. If you are in Europe, you cannot miss the Paris Blockchain Week. We have 15% discount on the ticket, so just hit us on social media or check the description to get the code and save on your ticket. I look forward to see you in Paris and also in the US, in Vegas, for the largest Bitcoin conference. You cannot miss it. Now that I've said everything I had to say, let's get to the interview. Hi, Andrew. How are you?
Hi, Steffi. I'm happy, and I'm happy to be here with you. Thank you.
Yeah, great to have you on the show. So let's maybe before we dive into Bitcoin itself and also, the book that you have co-authored about
the, building a strong case for, specifically from a philosophical perspective. Tell us a bit about your background and the work that you have been doing.
Academic, and in particular an academic philosopher. I teach at a small college here in Singapore called Yale NUS College. And my background training was just in philosophy only. But some years ago, my students started asking me questions about money, about career, about the role of the desire for money in their own lives. And this was something that really concerned them. They wanted to talk about more. So I started teaching an interdisciplinary class on money that drew together philosophy, politics, and economics. And around the same time, I'd started to deepen my own thinking about Bitcoin. I'd been a Bitcoin user, a Bitcoin enthusiast of sorts for some years before that. But it increasingly seemed to be something of actual intellectual interest, that there's something substantial and kind of difficult to understand here. And my students were into it, I was into it, and so eventually it became a research interest as well. Something not just to teach about, but also to write. And that's what led to this book, Resistance Money, a philosophical case for Bitcoin.
What does resistance money mean to you?
I guess there's two words, so maybe we can take them in reverse order. We argue that Bitcoin is money. That is, it is suitable for use in the ways that monies are used, most importantly as a medium of exchange, and also for the other roles that monies play. And it's a special kind of money. It's not like any other money that we know, because though it's digital, it doesn't rely on trusted third parties to either hold it for you, because unlike a digital dollar, you can take custody of it yourself, to transfer it to others. You can do that without the help of PayPal or some bank or other third party. And it's not even produced by a central bank or even a commercial bank, some trusted third party that produces it. So when you see these three features together, that Bitcoin is digital money without mediators, managers, or makers, what that means is that it's taken authorities out of the situation. So let's say we're in a situation where we want to resist authorities. Well, Bitcoin is a tool that allows you to route around them, to transfer value without the permission or knowledge of banks, of governments, of churches, of other financial institutions, of any intermediary who'd want to clamp down or surveil or control people's transactions or storage of value. So that's what we mean when we say Bitcoin is resistance money, is that it's money, and it's money that's a tool of resistance, kind of like other resistance technologies. So perhaps a useful category to think about here is just a broader category of technologies that help individuals resist control. Think of encrypted messaging that allows you to send a message to your friend without anybody being able to spy on it. That gives you control over your own life to control the information that you're sending as an individual. The personal firearm is a resistance technology. It allows someone to resist violence. Obviously, you can't resist that much. 30 guys with guns will beat one guy with a gun, but one guy with a gun can be surprisingly effective against an institution who wishes to do violence to him. Hence things like guerrilla warfare, the asymmetric advantage granted there by the firearm. One last example is the printing press, which gives very small groups of individuals or even just one guy in a basement the ability to, at low marginal cost, reproduce ideas. Once you've typeset, and printing the next page is almost free. So you can print your little pamphlet and then send it out to the world, blast the world with your ideas. And ideas change the world. So before it would have taken a powerful institution to really develop and promulgate ideas and spread them, for example, the Catholic medieval church, now a guy in a basement can do it. And that is the stuff of revolutions, of resistance, and it's the stuff of the world which we live in today. There are a number of other technologies like that. So we think Bitcoin fits in that category, and it's the money version of those kinds of technologies.
Right. I want to challenge you here because I know that many investors, they are following our channel, they will be arguing, right, there is Bitcoin, but there are thousands of other cryptocurrency out there. So Bitcoin obviously has proven, especially in this cycle, to be a more stable crypto assets. Now is well recognized by Wall Street as a store of value. It's kind of like much more mature. What makes it unique compared to other digital assets? And what do you see the rest of the crypto world? So what I would like to ask is that, what is the case that you make for Bitcoin for investors specifically?
Investors want value. They want something that will either hold or return and increase value. So one question we should look at here is why Bitcoin is valuable and why it has value that maybe some other things don't have. I would say Bitcoin's value at its heart derives from its usefulness. It's a useful tool, and it can do things that other digital assets can't do. And maybe looking at those three roles that I mentioned earlier can help us see this more clearly. Think first about that maker role. So in the case of traditional digital monies like the digital dollar digital pound, digital Singapore dollar. The makers are commercial banks and central banks. They produce the money and then they authorize users to put it in their phones, bank balances stored in bank ledgers, and so on. Now, many other cryptocurrencies work like this as well. There's a trusted institution, a foundation, a firm, or maybe just a group of individuals who together printed tokens for free, zero marginal cost, just like with the dollar, and then sold them to other people for real money. So think about the way that Ethereum was founded. The Ethereum Foundation created a bunch of tokens and then sold them to people for Bitcoin. Interesting. Now, this is not the way Bitcoin works. There is no central foundation that printed the tokens in the first place. You can't make Bitcoin for free. Even when Satoshi Nakamoto, the pseudonymous inventor of Bitcoin, first minted tokens, he had to mine them just like anybody else. So there are no trusted makers, and even Satoshi himself had to pay for Bitcoin in this way. He had to mine them, which is kind of like buying them from another Mother Nature, because he had to spend energy and spend chips, computational time, to actually mine those Bitcoins. So this is one important respect in which Bitcoin differs from currencies like BNB, ETH, Cardano, Solana, and many other leading cryptocurrency tokens. The ones I just named were all minted, at least in substantial form and sometimes in full form, at zero marginal cost. So the creators just made them for nothing out of thin air and then tried to sell them to people for real money. That is not the way Bitcoin works. So if you're looking for a system that is set apart in that way, that isn't like a fiat money where you can just make it for free, Bitcoin stands apart. Now, why is that actually useful? So let's trace back to Bitcoin's value, which I say goes through its usefulness. Well, let's say that you're worried about excessive money printing. Let's say you're worried about irresponsible central banks or commercial banks who print too much money. You don't want a currency that someone has printed or can print for free. That is precisely the problem that plagues fiat monies, is they can be printed on the margin for free. Each additional dollar is free for a central bank to produce. Bitcoin isn't like that, though. Bitcoin can't be produced on the margin for free. In fact, it's quite expensive to produce, which keeps the supply exactly in line with a limited supply schedule. So Bitcoin's proof of work design that has this expensive mining as a part of it, it's a very weird feature, but it actually makes Bitcoin useful at resisting inflation and having a reliable supply cap and supply schedule that other cryptocurrencies simply cannot guarantee, because from the ground up, they haven't been built to be that way. They've been built instead to be more like fiat currencies.
So you basically build a case around the value that Bitcoin is bringing and definitely link it back to the energy element that is a feature of Bitcoin.
I think it's part of the case for Bitcoin's uniqueness. Now, let's look at the other things that make Bitcoin useful, things Bitcoin can do that other cryptocurrencies can't. Here's another, that I can transfer value to you without the participation, the permission, or involvement of any third party. This is increasingly difficult to do with many competing cryptocurrencies because the software and the hardware required to actually operate a full node is increasingly expensive. So for example, take Solana. Have you ever tried to run a full Solana node?
No, not myself.
Most users haven't. In fact, there aren't that many Solana full nodes. It costs, estimates vary, but quite a bit, both in fixed costs for the computer that you have to have, thousands of dollars, and then perhaps dozens, hundreds, or even thousands of dollars a month in bandwidth and storage costs. Now, these costs, the estimates vary, and it actually depends on how much stuff is going through the network at the time. But at any rate, this is kind of industrial level requirements to actually run a full node where your computer is checking transactions itself. You're not relying on someone else's computer to do it for you. Now, Bitcoin can operate on a computer that costs just a couple $100. And what you really just need is about 600 gigs of storage to store the whole blockchain. And then you can verify every transaction that comes in using your own device. You don't have to trust someone else. So here's why that's useful. When you don't trust someone else, then you can't be stolen from or ripped off or scammed in some other way, because your own device, your own software running your rules is actually verifying the transactions. So to the extent that people with other networks aren't able to, and don't as a matter of the culture either, run their own nodes, they're susceptible to various kinds of vulnerabilities because they're trusting someone else. Not so with Bitcoin if you're running your own node. Of course, if all you have is a wallet in your phone, then you're probably trusting someone other node, whoever produced the wallet. So I recommend running your own node. There's one on the computer that I'm using right now. I verify Bitcoin transactions as they come in, not trusting anyone else to do it, but doing it for myself.
I want to stop here and talk a bit about custody, because one of the greatest feature of Bitcoin is actually self-custody, so the ability to store money without relying, as we said, on third party. Like, obviously, when it comes to custody, there is a big challenge, because not everybody is able to custody, or even maybe should custody their own assets. And then obviously there are problem of security as well. So as an investor, is self-custody the best solution, or should be there other alternatives? That's kind of like a big question that when I'm talking to investors, should I custody my own Bitcoin, or should I just give the money to somebody else to invest into Bitcoin on my behalf, or should I buy Bitcoin but not self-custody?
If you want to use Bitcoin as resistance money, then I think it's wise to take self-custody of at least that portion of your Bitcoin stack that you want to use as resistance money. Think of it the way you might think of with cash. How much cash should you have under your mattress or inside the drawer next to your bed? Well, it depends. It depends on what you need the cash for and how much of your total portfolio you want to be in cash to protect yourself against certain things. So let's say that you are worried about a bank run, or you're worried about being debanked or blocked from having access to PayPal or some other payment service. You might want to keep more portion of your portfolio in cash than others might. I mean, physical cash. Now, many of us are not in that position. And many of us, further, as you noted, are actually not well situated to look after our own cash. Maybe there's a bunch of people who go through our house, and so they might find it. So also with the private keys that control our Bitcoin. So I think there are a couple of variables to think about here when deciding whether to take self-custody. Is what is your threat model? Like what does self-custody actually give you? Do you need that? Now, if you're an investor who trusts institutions like BlackRock or Coinbase or BNY Mellon or Fidelity, chances are, let's say you trust them with a huge portion of your portfolio. So these are well-known custodians who run things like the Bitcoin ETFs and these big custodial platforms. If you already trust platforms like that with a significant portion of your portfolio, no, you're not taking on additional custodial risk if you bought ETF shares, but you're also not getting the benefit of self-custody either. So there are trade-offs here. And I think different investors will think differently about what the right trade-off is for them. But here is an important truth that I think holds regardless of what your particular risk profile is, which is that for some Bitcoin users, Bitcoin is useful only to the extent that they take self-custody. So I think of this as a kind of kernel or core of Bitcoin's usefulness. It's its resistant properties, its ability to transfer without a third party, to be held in self-custody, and that it has no makers. And then there's investors who are betting on the success of that tool, and they might have different risk profile and not actually need the tool itself. And so they can take different trade-offs or different options. And then there's the people who are betting on the investors. Those are the speculators. And of course, there's the speculators on the speculators. Kind of like, so think about the core usefulness. What's the usefulness of a boat? It's to float, to be a place where you could be on in the water. Now, you might not actually need to live in the water, but you might still want to own a boat because you know that somebody else might want to live in the water. So Bitcoin might be like that, where there's a core usefulness, this resistant features, and then there's other people who might want to own it, to bet on it, or to bet on the betting of it without taking part in those features. So in the boat case, you might own the boat, but have it stored in a marina far away from you and have a manager who looks after it for you just to make sure that it's not leaking. And then maybe someday you'll move into it. Maybe someday you'll sell it. Maybe someday you'll give it to your kids, but maybe you'll never actually need it yourself to survive the flood in.
Let's talk about energy, because that's also another point that many investors, when they're making decisions, they're kind of like concerned about. And Bitcoin, especially because it comes from like proof of work, like we said, is often criticized for its energy consumption. But there is also a research that has shown how Bitcoin can help to stabilize the energy grids. Do you think Bitcoin can be a net positive for the global energy system? Or Bitcoin is a net positive overall for the global energy system?
I think it's kind of complicated. This is a philosopher's answer for you. Maybe a first stage thought is that Bitcoin doesn't use energy. Rather, Bitcoin users buy energy. So they're just like any other buyer of energy. It's not as though they're not paying for it. No, they are paying for the energy that they use, just as those who drive electric cars pay for the energy they use, just as those who heat their mosques or churches in the winter are also paying for the energy they use. Now, in a free society, we typically allow people to express their values, as you do when going to church or mosque or driving your electric vehicle, by buying energy to support those values and do the stuff that those values involve. So the problem isn't really energy use. That's solved by just having a price, and then people decide whether they want it or not. And Bitcoin users choose through fees and through miners minting new Bitcoin to pay for energy use. The real problem isn't that, I think. I think the deeper problem is externalities. It's negative effects from that energy use potentially spilling over to other people who aren't party to the transaction. And this is bad because it's kind of unfair for, let's say that I'm a Bitcoin user, I'm paying network fees, and then carbon is spewing into the atmosphere as a result of the energy production required to support the Bitcoin mining that I'm paying for with those fees. That's kind of unfair to you because the carbon dioxide emissions harm everyone, including you, Steffi. Let's say you're not a Bitcoin user. So that wouldn't be fair, and it would be what economists would call an externality. Now, my own research with my team has shown that there are indeed some negative externalities associated with Bitcoin mining. These are not nearly as bad as the critics say. And one important paper, maybe the most or the second most important paper ever published, most influential paper published about Bitcoin's carbon emissions, had this model that predicted this enormous, so the curve basically goes like this over time, and predicted that Bitcoin's carbon emissions will go like that curve, and that it will raise global temperatures by 2 degrees Celsius across 50 years or something like that. Now, that model was released in 2018, and we now have some years under our belt to test it. It's been empirically falsified. In fact, instead of having so many gigatons, we've only had something like 260 cumulative megatons of carbon emissions associated with Bitcoin mining up through 2024 or so. So it's off by orders of magnitude and just wildly refuted by the empirical evidence. It's still, though, on our view, there still are negative externalities associated with mining. There are carbon emissions because some of the energy used for mining comes from burning hydrocarbons, oil, gas, even coal, and even wood, I suppose. Maybe some Bitcoin miner somewhere is burning wood. Now, that is bad. So one thing Bitcoin users should do, and that we recommend in the book, is to find ways to clean that up. Now, the cool thing is that the economics of Bitcoin miner is actually forcing that to happen anyways. Bitcoin mining happens most of all on the margins of our energy grids in both space and time. Bitcoin mining is a globally competitive enterprise where margins are razor thin. So they're very, very competitive. They have to find the cheapest energy. Where is that found in space and time? It's actually in the edges of grids in both space and time. So they're buying the energy that nobody else is using at the time they're not using it in the time dimension. And they're doing it off in the middle of nowhere in the space dimension. Now, one cool thing about energy economics is that the greenest energy in our world, that is the lowest carbon emissions, is actually found precisely on those margins. It's a hydro dam out in the middle of nowhere where nobody's moved yet. It's the solar farms in the middle of West Texas. It's geothermal energy in El Salvador that is not even close to being tapped into by the small population of that country. 5 million people, but enough volcanoes there, enough geothermal energy to support a civilization of 30 million. So Bitcoin miners it doesn't take charity to put them there. They're actually forced by the economics of mining to increasingly move to the margins where we find low carbon energy sources. So the network is, in a way, self-cleaning, and we see a definite trend of this over the last 5 years when people have really been paying close attention to it. So the amount of carbon emissions associated with each unit of energy expenditure is actually going down over time. So this is good news. We could accelerate that, of course. Bitcoiners can invest in green Bitcoin mining operations. And then you've just accelerated that trend and made this decent worry go away. So I'm pretty optimistic about this, that it's a significant or it's a real problem, but it's been exaggerated and is getting much better in ways that we can actually measure and detect.
If we fast forward many years and one Bitcoin is worth, for example, 1 million, do you think that valuation will be justified in terms of the energy it consumes?
I don't think the energy consumed makes Bitcoin valuable. In fact, I think it's the other way around, that because Bitcoin is valuable, people are willing to expend a great deal of energy to mine the Bitcoin. But the skeptic might still wonder, wait a minute, we're spending billions of dollars every year to mine Bitcoin. How can that possibly be worth it? And I would just turn the question on them and say, well, there's probably lots of other things where we might ask that question. I think you would see that it's inappropriate. So think about a mosque where someone has spent enormous human creativity and energy and ingenuity, and also energy in terms of fossil fuels burning, to create the intricate mosaic patterns that you find everywhere in the walls, on the floor, even on the ceiling. Now, think about someone who says, it's tremendous waste. I don't go to the mosque. The parallel of that is I don't use Bitcoin. I think it's super wasteful for these people to be spending all that creativity and time and energy to make their mosque beautiful. And my response to that is, in a free society, they get to do that. So also in a free society, people get to spend $1 million on a Bitcoin and to spend $990,000 to mine that Bitcoin, which is what you might predict. The cost of production will rise to meet the price of the commodity in the open market. So I just think that's how the free world works, that people get to decide for themselves what something's worth to them, as long as they're not harming others. So what's true of the mosque case is true of Bitcoin as well. And of course, if you're not a liberal, if you like telling other people what to do and what's valuable, you won't accept that argument and you'll need other arguments. But for anybody who's remotely attracted to a life where we live and let live and where people get to decide for themselves what's valuable, so long as they're not harming others, I think there's a pretty compelling case here.
Let's move from the case for Bitcoin for investors to the case for Bitcoin for institution, which I'm quite interested. Obviously, we have got a company like MicroStrategy that kind of led the way to start to buy Bitcoin, bring it as part of the balance sheet. And there are more and more companies that follow the MicroStrategy example and use Bitcoin as a way to manage their treasury. And what I wanted to ask you, because, you have been thinking around the case for Bitcoin. What is the case for corporation holding Bitcoin?
I think it might differ from that for an individual. So first, let's see why an individual might hold Bitcoin, and then maybe we have to modulate that to understand for a corporation. An individual might hold Bitcoin for self-sovereignty, for self-custody, to be able to make transfers without somebody else's permission, and to be able to store value in ways that a central bank can't mess with by diluting the supply of money. Now, for a corporation, some of those just won't apply. Think about the case of self-sovereignty. Well, a corporation isn't a self. It's an entity comprised of multiple selves. The shareholders, the board, the employees, and so on. So that doesn't make sense. And then think about how custody works. Well, self-custody is one person hiding the keys under their bed, writing down the 12 words, the secret passphrase to control their Bitcoin, and putting it in a safe or putting it under their bed or putting it in the drawer. Now, for corporate governance, this actually would never be allowed. You can't just have one officer of the corporation who controls the entirety of the treasury just with one little device, or who has the passkey written in a piece of paper under his bed. That's not how it works. So what tends to be the case, and it's required by corporate the laws and the bylaws that govern most corporations in the developed world, is that custody is shared in some way, or a trusted custodian is entrusted with the task of doing the custody for the corporation. Okay, so the way corporations work, that justification for holding Bitcoin is not really going to apply. What we're left with is the other two, which is transferring without permission and inflation-resistant money. Again, I think the first of those probably won't apply for a corporation. How many corporations that are actually legally incorporated want to make transfers that banks, whether central or commercial or other payment processors, are ignorant of or can't control? Well, the legal operations probably don't need that capacity. Now, some of them in fact do. So here's a small exception, an important one. Think about legal cannabis enterprises in the United States. In many American states, cannabis or marijuana is legal to produce, to sell, to consume, to hold for recreational or for medicinal purposes. And yet virtually no firms that actually engaged with that, who grow the cannabis, who distribute it, who sell it, virtually none of those firms are allowed to have bank accounts. Bank of America won't bank them. JP Morgan Chase won't bank them. They're forced to use cash instead, which is extremely dangerous for a business, because that means that you're susceptible to robbery. It means that you're susceptible to theft by employees and other leakage. So there's a small kind of legal enterprise that actually does make use of Bitcoin. As a matter of fact, some cannabis firms in the United States do use Bitcoin for just this reason. They want a digital asset that they can keep track of, and it's not physical. It's not so easily stolen as a pile of cash sitting behind the counter at a store in Colorado. But they can't get access to a JP Morgan Chase bank account, so they use Bitcoin instead. Those exceptions aside, though, that kind of corporate use of Bitcoin that's fairly marginal. So what we're left with is the inflation resistance. And this really is what the MicroStrategy play is all about. I think to make the case here, all you need to do is look at the threat variables, build a model with some variables that might threaten the stability of the money that you have on hand, and then make a prediction about where those variables will go. So here's one. Will central banks continue to print money? Yes or no?
Yes.
Will central banks continue to occasionally fail. There's something like 170 fiat currencies around today. Every few weeks, one of them goes belly up. Will that continue to happen? Build up a stock of questions like this. Then you have a little model that tells you whether, so maybe we won't just answer yes or no. We also give time frames on these variables and degrees. Like, so what's my degree of confidence this will happen? And then to the extent that the answer is yes, I'm very confident and it will happen within the period that I'm considering holding Bitcoin across, then I think we have the beginnings of a case to hold Bitcoin for that period. Now, if you're totally confident in central banks to not print too much money, if you don't think that they'll go belly up, and if you trust those who manage our financial systems, then you probably don't have a reason to hold Bitcoin. You should just hold US treasuries. That's fine. But if you've built a model that has these variables and you think, there's a risk here, then that would be a good argument to hold at least some Bitcoin. So I'm not a corporate treasury manager myself. I leave that to others. But if I were to build a case, that's how I would go about it.
Build me a case also for a state.
You mean governments, nations?
Yeah, nation state having Bitcoin as a reserve asset.
One thing I would look at when building or evaluating that kind of case is a likelihood of a geopolitically split world in the moderate to long-term future. And what I mean by that is that if you see that there's a chance for realignment of existing alliances or fracturing of those, think about one possible scenario. Would not be great for the world, but it is possible. The United States and the European Union nations have long worked together. They're allied in various ways through NATO, and they're also monetarily linked. Banks in Europe hold what are called Eurodollars. They have these synthetic US dollar substitutes. Many central banks hold American treasuries. Okay, so there's a lot of linkages. Now let's say that those started to break. Okay, now throw Russia into the picture and throw China into the picture. Let's say that 3 or 4 more or less autonomous monetary and governance zones, no longer allied, existed across the world. In a world like that, we do not have a global payment system like Fedwire or chips or wiring money or anything you might normally use to get money digitally from one bank to another. These things will likely crumble under that kind of geopolitical pressure and fracturing. So Bitcoin, by contrast to any of those, is a globally neutral settlement network that, in fact, is now even used to send money from the West to North Korea or to Russia or vice versa, despite the fact that OFAC blocks some of those transactions. Bitcoin is unblockable by OFAC in that respect. Go back to that globally fractured world. Would it be useful to have on hand some money that you could send to someone that one nation state could send to another, even if there wasn't a stable network that connected them? Yes, that seems useful. Let's say you wanted to buy arms or sell them, or buy gold or sell it, or buy rare earth metals or rockets or weapons or anything else. Then having a way to, on or off the books, whatever the case is, sell value across those now closed borders, that would be very useful indeed. So there's a strategic reason why in a globally fractured world, you might want to have some Bitcoin on hand. Another reason is if you're not a monetary sovereign yourself and you're dollarized. So you're totally reliant on the US dollar. A number of countries who are not the US are completely dollarized. Places like Cambodia, in my part of the world, El Salvador in the Americas, many others. They're not monetary sovereigns. They rely instead on the Fed. But let's say that they don't totally trust the Fed to not print too much money. How can they protect against that? Well, the nation itself can build up reserves of Bitcoin that cannot be inflated away and that cannot be debased, unlike the dollar reserves they might have held instead.
You have done a lot of work with the Bitcoin Policy Institute as well. What do you consider to be a good regulation?
One thing that I'll give a small concrete example and then a broader agenda. The small concrete example that I think about a lot and that I'd love to see happen is fair treatment of Bitcoin under tax law. Right now, Bitcoin is not treated as money under tax law. Instead, it's treated as property for Americans, which means that if there's a fluctuation in the value of the Bitcoin, and let's say it goes up, then you pay capital gains taxes on the difference. Now, that is not actually how foreign money is treated elsewhere in American tax law. If I buy some euros and then the Forex markets make the euros go up 10% against the dollar within the next week, and I spend the euros, that's as long as I'm spending less than 200 euros a day, $200 worth of euros a day, called a de minimis exemption, I do not owe capital gains taxes on that. So here's what seems to me to be a fair treatment of Bitcoin is just treat it like any other foreign money where there's a de minimis exemption and you don't have to do these ridiculous filings and tracking every little expenditure. the unfortunate situation Americans are left with right now is that not only do they pay capital gains taxes on their Bitcoin, but they also had this onerous task of tracking every single Bitcoin transaction, which is costly and annoying. And I just think unfair, because you don't have to do that with other foreign currencies. The broader framework I'd like to see adopted, especially in the United States, where the Bitcoin Policy Institute is located and that it focuses on, is one of neutrality and, let's say, openness to innovation. This has long been an aim of American policy in other areas of technology, to be neutral between the various possible technical outcomes. So neutral between, let's say, Mac OS versus Windows, but to, within the bounds of the criminal law, allow innovation. Now, unfortunately, a number of both enforcement actions and in some cases statutory laws get in the way of innovation. I have in mind things like prosecuting people who create privacy tools for Bitcoin. That's not neutral, and that's not allowing for innovation. That's sort of clamping down in an almost authoritarian, some would say, indeed, authoritarian way on someone developing a new tool that promotes human freedom. So I think a somewhat more open stance, and one that is not picking and choosing winners, but instead allowing innovation to happen and allowing people to themselves select which tools they find useful and want to spend their time and their life energy on.
100%. And that's where education is very important, especially when it comes to government, and then maintain that dialogue with the industry, but also having an agenda to execute on fostering innovation rather than, see what's happened. And I just think that, for example, looking at what the US is doing right now, Trump putting together a team of people that actually understand the space, and they have got a mandate to kind of, okay, we need to get crypto in a way that is better regulated, it can be adopted more easily, it's a more clear framework that is clearer. I think having that mandate is important, because discussions are great, but then if you don't have the kind of call to action, then it becomes a bit pointless. So
Agreed.
Definitely the US is doing a great job there.
There's one risk which the crypto industry is basically feeling right now, which is that so many of the people associated with, let's call it crypto education for lawmakers, are themselves seen as, rightfully or wrongfully, as being token pumpers, that their job in DC is to raise the value of their tokens. So you're hired by the Cardano Foundation, you're hired by this firm or that one associated with some specific cryptocurrency, and your job on Capitol Hill is to pump the value of that. I think that reduces credibility quite naturally, and it's a real danger. So finding neutral voices who aren't trying to pump a particular coin is an important step to take for those who wish to have credibility with lawmakers.
Yeah, that's an important point. But I do think there are people, they actually think more about the industry themselves rather than their own project standalone. And maybe those are the people that have been resilient over many, many years. Because, crypto
Coin Center is terrific on this. The entire Coin Center team, they're very good at what they do, and especially in legal battles in the courts. And they're not picking sides. They're not trying to pump some token or even pump all the tokens. They're trying to create a fair and equitable environment for technological innovation and for freedom.
Yeah, and then I think, there are different cryptocurrencies that will fulfill different purposes, and that's why you need kind of like a variety within the ecosystem. So maybe there is a space for more than one. But we will see how things unfold. Andrew, thank you so much for coming on the show. For anybody that hasn't read the Resistant Money, a philosophical case for Bitcoin book, I highly suggest to go on Amazon, get the book. It is accessible to everyone, and it kind of go through all the story of Bitcoin, tell you how it was born, it tell you all the story, and then it discuss some very interesting point. Some we brought up today, but there are many other that dive a bit more deeper. And I think if you want to get involved in the space, which you should, because, there is no way that you can't get involved in the future of finance, you should really go back to basics. And this is a great book to start. So Andrew, thank you so much for coming on, and big shout out to your book as well.
That's so kind. Thank you so much, Steffi. And thank you for actually looking at it. I really appreciate that. That's an honor to us. Anytime anybody reads, even so much as one sentence from our book, we're honored. So thank you very much.
Thank you.
Cheers.